Florida's housing dream has turned into a disaster zone. In 2025, once booming markets are drowning in listings, with inventory exploding by 500%, 800%, even 1,000% in some cities. Homes that sold for $300,000 in 2020 shot to nearly $500,000 by 2022, but today they're crashing back down, losing $70,000 to $150,000 in equity. Condo towers are slashing $100,000 off asking prices, yet units sit unsold for months. Insurance premiums topping $12,000 a year and HOA fees over $1,000 a month are pushing owners to the brink. This isn't a correction, it's a collapse. These are the 10 Florida housing markets falling like a rock. Number 10. Panama City. Panama City, once a laid-back coastal haven with turquoise waters and a booming short-term rental scene, is now drowning in for sale signs. The 2025 housing crash has turned this Gulf Coast market into a case study of overbuilding gone wrong. Between 2019 and 2022, prices here surged nearly 65%, with the median home climbing from around $215,000 to $355,000. Investors, lured by hurricane rebuild contracts and Airbnbs, poured in cash expecting endless growth. But the boom has unraveled with a vengeance. As of early 2025, Panama City's active listings exploded nearly 300% year-over-year, leaving buyers spoiled for choice and sellers slashing asking prices in desperation. A three-bedroom bungalow that once fetched $325,000 in 2022 now struggles to sell at $260,000, a brutal 20% haircut. Some waterfront condos are being marked down by $50,000 to $70,000 just to draw a single offer. Insurance premiums, already averaging over $6,000 per year, have soared another 30%, wiping out affordability for middle-class buyers. Even cash-rich retirees are hesitating, with days on market stretching past 120 days, double the norm just 2 years ago. Rental demand is also fading as tourism softens, leaving investors holding empty units and bleeding mortgage payments. The result? Panama City's market is now flooded with inventory equal to nearly 8 months of supply, compared to just 1.5 months at the 2021 peak. That's a 430% increase in unsold homes choking the pipeline. Local builders who once bragged about no slowdown are now sitting on unsold subdivisions, offering upgrades, buy-downs, and even free appliances. For homeowners, equity has evaporated overnight, and for new buyers, the bargains come with a chilling warning. The bottom may still be falling. Panama City isn't cooling, it's collapsing. Number 9. Bradenton. Bradenton, nestled along Florida's sun coast just south of Tampa Bay, was once one of the fastest appreciating housing markets in the state. Between 2019 and 2022, the median home price skyrocketed from $240,000 to nearly $420,000. A jaw-dropping 75% increase in just 3 years. Builders rushed to capitalize, pumping out subdivisions and condos at record speed. But in 2025, the dream is unraveling. Inventory in Bradenton has exploded 350% year-over-year, with active listings ballooning from around 1,200 to over 5,000 homes. The result is a brutal standoff: too many sellers, not enough buyers, and prices plunging. Today, a 4-bedroom suburban home that commanded $450,000 during the peak now struggles to fetch $370,000, a $80,000 equity wipeout. Condos near the riverfront are being chopped down by $50,000 or more, while new construction developers are dangling 10% discounts, free upgrades, and mortgage rate buydowns just to clear backlog. Buyers, knowing the market is tilting in their favor, are lowballing aggressively, forcing desperate sellers into concessions they never imagined. Insurance has become a second wrecking ball. Premiums in Manatee County have jumped from $3,200 annually in 2020 to nearly $6,800 in 2025, with some coastal homeowners facing over $10,000 bills. Add in HOA fees topping $400 per month in gated communities, and affordability has collapsed. Properties that once sold in under 2 weeks now linger for 150-plus days, clogging the market with stale listings. Bradenton's inventory now represents nearly 9 months of supply, a catastrophic level that screams buyer's market. For locals who stretched during the boom, the crash feels worse than 2008. Bradenton's housing scene isn't just correcting, it's cratering. Number 8. Melbourne. On Florida's Space Coast, Melbourne was supposed to be untouchable. Fueled by aerospace jobs, retirees, and a migration wave from pricier metros, home prices here surged from $230,000 in 2019 to nearly $390,000 by late 2022, a dizzying 70% leap. But in 2025, the cracks are undeniable. Active inventory has surged almost 400% in just 2 years, with listings climbing from around 900 homes to over 4,500, leaving buyers with unprecedented leverage. Prices are unraveling fast. A 3-bedroom ranch once listed at $375,000 now hovers closer to $310,000, slicing off nearly $65,000 in equity. Waterfront condos that drew bidding wars in 2021 are being marked down by $75,000 to $100,000, and some sit vacant for over 180 days. Developers who race to build subdivisions in Palm Bay and West Melbourne now dangle free closing costs and $25,000 price cuts just to attract hesitant buyers. Insurance is another wrecking ball here. Premiums across Brevard County have spiked over 40% since 2021, averaging $5,500 annually, with coastal zones far higher. Add in property taxes of nearly 2% of assessed value, and many recent buyers are finding their monthly payments hundreds of dollars higher than anticipated. Melbourne's rental market is also faltering. Investors who banked on short-term rentals near the beaches are facing oversaturation, with Airbnb rates down 20% year over year. Mortgage-to-rent mismatches are forcing fire sales, further flooding the market. With nearly 8.5 months of inventory, Melbourne has shifted from a seller's paradise to a brutal buyer's market almost overnight. The city that once symbolized Florida's unstoppable growth is now one of its most sobering cautionary tales. Number 7. Palm Beach County. Palm Beach County, long seen as the jewel of South Florida, is now flashing warning lights across its once untouchable real estate market. From West Palm Beach to Boca Raton, the boom that pushed median home prices from $330,000 in 2019 to nearly $600,000 by 2022 has hit a brick wall. Inventory has exploded more than 320% since 2022, with active listings swelling from just 3,000 homes to over 12,500. Suddenly, neighborhoods once plagued by bidding wars are littered with price-cut banners. Luxury condos along the Intracoastal that sold for $1.2 million at the peak are now being relisted at $950,000, sometimes still sitting unsold for 200-plus days. In middle-class suburbs like Boynton Beach and Lake Worth, 3-bedroom homes once selling at $525,000 are now struggling at $430,000, erasing nearly $100,000 in equity. Builders in the western communities are slashing base prices by $30,000 to $50,000 and still struggling to attract traffic. Then comes the killer: insurance. Palm Beach County premiums have doubled in just 3 years, averaging over $9,000 annually, with some coastal homeowners facing $15,000-plus bills. HOA fees in condo towers have also surged after Hurricane Ian-era assessments, sometimes topping $1,200 a month, making ownership brutally expensive. Rental investors are bailing as well. Rents that climbed to $3,200 a month in 2022 are now dropping closer to $2,700, squeezing cash flow. With supply climbing and demand retreating, Palm Beach County sits on 10 months of inventory, the highest in 2 decades. For a region that once symbolized Florida luxury, the market now looks more like a slow-motion implosion. Number 6. Jacksonville. Jacksonville, Florida's sprawling metro with nearly 1 million residents, was a migration magnet during the pandemic. Prices leapt from $215,000 in 2019 to $375,000 in 2019. 2022. a 74% gain fueled by remote workers and investors. But the tide has turned fast. By 2025, active listings exploded 280% year over year, jumping from 5,000 homes to over 19,000, one of the steepest increases in the state. The median price has already slipped minus 3.8% year over year, marking the first significant drop in over a decade. A standard 4-bedroom suburban home that fetched $400,000 at the peak now sits at $345,000, shaving $55,000 off owner equity. Downtown condos near the St. Johns River are being chopped down by $40,000 to $60,000, often sitting unsold for 6 months or more. Days on market have more than doubled, from 25 days in 2021 to nearly 70 days in 2025, while price cuts are spreading like wildfire. Nearly 38% of active listings in Duval County have already been reduced at least once. Builders who flooded the outskirts with new subdivisions are now offering $20,000 in incentives, free upgrades, and temporary 4% mortgage buydowns just to offload inventory. Insurance is adding more pain. Annual premiums average $5,200, up 45% since 2021. With property taxes running close to 1.7%, affordability has collapsed, leaving many first-time buyers sidelined. Investors banking on rent growth are also hurting. Median rent has flatlined at $1,650 a month, not enough to cover inflated carrying costs. With nearly 8 months of inventory on the market, Jacksonville's housing sector isn't cooling. It's unraveling into one of the sharpest corrections Florida has seen in decades. Number 5. Orlando. Orlando, the theme park capital of the world, once symbolized unstoppable housing demand. From 2019 to 2022, home prices soared from $260,000 to nearly $450,000, a staggering 73% increase. Investors piled in, betting on tourism, rental demand, and population growth. But by 2025, the market's magic has evaporated. Inventory has ballooned 320% in 2 years, with active listings skyrocketing from around 4,000 to more than 17,000 homes. Entire subdivisions built for Disney workers and retirees now sit half-occupied, while sellers slash prices like clearance racks. The median home price has already slipped to $395,000, erasing nearly $55,000 in equity. A 3-bedroom home near Lake Nona that once sold for $500,000 now struggles to attract offers at $420,000. Condos near International Drive that fetched $300,000 in 2022 are being reduced to $240,000, a 20% drop, and still sitting for 180-plus days. Over 40% of listings in Orange County have seen at least one price cut since January. Insurance premiums have added gasoline to the fire. The average homeowner's policy now exceeds $6,200 annually, up nearly 50% since 2021. HOA fees in new-build communities often top $350 a month, pushing monthly carrying costs beyond what locals can afford. Even rental investors are struggling. Median rents have slipped from $2,300 in 2022 to about $2,050, squeezing margins. Builders are desperate, offering $25,000 in incentives, mortgage buydowns, and even free backyard pools to unload units. With nearly 9 months of inventory, Orlando has flipped from a seller's paradise to a buyer's market nightmare. The city that once thrived on dreams is now drowning in unsold homes, price cuts, and financial strain. Number 4. Miami. Miami, long. The crown jewel of Florida real estate has become ground zero for the state's housing unraveling. From 2019 to 2022, the median condo price surged from $350,000 to nearly $620,000, a blistering 77% climb. Foreign buyers, investors, and tech migrants fueled the frenzy. But by 2025, the tide has reversed hard. Active listings have exploded nearly 280% in just 2 years, with Miami-Dade inventory swelling from 7,000 to over 27,000 homes. Condo towers that once sparked bidding wars are now in fire sale mode. A brickle one-bedroom listed at $550,000 in 2022 now struggles at $440,000, a $110,000 drop. Luxury waterfront units in Sunny Isles are being reduced by $150,000 to $200,000 and still sit unsold for 200-plus days. Nearly 45% of all Miami listings have had at least one price cut since last fall. The affordability crisis is crushing demand. Insurance premiums in coastal Miami have soared above $10,000 annually, with some condo owners facing $18,000 bills after building assessments. HOA fees have also ballooned, with luxury towers charging $1,000 to $1,500 monthly, wiping out investor profitability. Rents, once thought untouchable, are finally bending. A two-bedroom apartment that fetched $3,200 a month in 2022 now sits vacant at $2,750, with landlords offering free months of rent. This collapse in rental yields is forcing investors to dump properties, further bloating supply. With nearly 11 months of housing inventory, Miami is now a buyer's market on steroids. What was once America's most glamorous real estate scene has turned into a minefield of falling prices, bloated costs, and shattered dreams. Miami isn't just cooling, it's crashing. Number 3. Cape Coral. Cape Coral, once hailed as the boating paradise of Florida, is now the state's most infamous housing horror story. Between 2019 and 2022, prices rocketed from $230,000 to nearly $420,000, an 82% surge that pulled in retirees, investors, and out-of-state buyers chasing waterfront dreams. But by 2025, the tide has gone out, and the wreckage is staggering. In the notorious zip code 33993, active listings ballooned from 80 homes to over 800, a jaw-dropping 1,000% explosion in inventory. The fallout is brutal. The median home price, once brushing $410,000, has plunged back toward $340,000, erasing $70,000 plus in equity for countless owners. Three-bedroom canal homes that fetched $450,000 in 2022 now linger at $360,000, with price cuts piling up every few weeks. New builds in the Northwest Quadrant are being dumped with $50,000 incentives and still sitting unsold for 200-plus days. Insurance is the knockout punch. After Hurricane Ian, annual premiums soared past $9,000, with waterfront properties exceeding $12,000. Combined with rising property taxes and HOA fees, the dream of Cape Coral living has become financially crushing. Over 42% of all listings are now marked down, a clear sign of panic selling. Rental demand, once buoyed by seasonal snowbirds, has collapsed. Investors who banked on Airbnb cash flow are now stuck with vacancies and mortgage payments. Days on market have tripled since 2021, and Cape Coral now sits on nearly 11 months of inventory, one of the worst gluts in Florida. What was once paradise has become a cautionary tale. Cape Coral isn't correcting, it's free-falling. For many, the waterfront wonderland is now an equity graveyard. Number 2. Naples. Naples, the crown jewel of Florida's luxury market, is facing a reality check so severe it's shaking even its wealthiest homeowners. From 2019 to 2022, Naples saw one of the state's steepest surges. Median prices leapt from $430,000 to over $800,000, a staggering 86% boom fueled by Wall Street money and pandemic-era migration. But by 2025, inventory has surged 250% in 2 years, rising from 2,500 listings to over 8,700, a supply shock not seen since the 2008 crash. Million-dollar estates in gated communities that once sold in days are now slashing $150,000 to $250,000 off asking prices, often still sitting unsold for 220-plus days. Condos along Gulf Shore Boulevard that peaked at $1.1 million are now languishing at $875,000, a nearly 21% decline. Sellers who bought at the top are trapped, with equity losses running into six figures. Even the ultra-wealthy are feeling the sting. Insurance premiums in coastal Collier County now average $12,000 to $15,000 annually, with luxury waterfront homes pushing beyond $25,000. HOA fees in upscale towers have soared past $1,800 a month after hurricane-related assessments. The carrying costs are staggering, even for buyers with deep pockets. Rents have also cooled sharply. Luxury seasonal rentals that commanded $15,000 a month in 2022 are struggling at $11,000, leaving investors underwater. With nearly 10.5 months of inventory, Naples has shifted from one of the nation's hottest luxury markets to one of its most oversupplied. Naples was once untouchable. Today, it's proof that no market, no matter how wealthy, can defy economic gravity. The paradise of the elite is now a market where prices are falling like boulders, and the bottom isn't in sight. Number 1. Tampa. Tampa, once the poster child of Florida's unstoppable growth, now stands at the epicenter of the housing crash. From 2019 to 2022, Tampa's median home price rocketed from $250,000 to nearly $430,000, a blistering 72% increase that drew national attention, investors, and families chasing affordability compared to Miami. But by 2025, the frenzy has turned into a nightmare. Inventory has exploded nearly 400% in just 2 years, climbing from 4,500 homes to over 22,000 listings, creating one of the deepest gluts in the state. The fallout is devastating. The median home price has already slipped back to $380,000, wiping out $50,000 in equity for average owners. Suburban 4-bedroom homes that easily sold for $475,000 at the peak now linger at $390,000, often enduring multiple price cuts. Downtown condos in Channelside and West Shore that hit $600,000 during the boom are now sitting at $480,000, a brutal 20% correction. Nearly 46% of all active listings in Hillsborough and Pinellas counties have already been reduced at least once. Carrying costs are choking demand. Home insurance premiums now average over $7,500 annually, with flood zone properties spiking into 5 figures. Property taxes hover around 2%, meaning many households are on the hook for $7,000 to $9,000 a year just in taxes alone. Combine that with HOA fees pushing $400 monthly in many communities, and ownership has become suffocating. Rental investors are also being crushed. Rents peaked near $2,400 a month in 2022, but have since fallen to $2,050, while mortgage rates above 6% make cash flow impossible. Builders, who once sold homes before construction, now sit on hundreds of unsold units, offering $30,000 discounts and buydowns. With nearly 11 months of inventory, Tampa has transitioned from boomtown to busttown. The city that once symbolized Florida's housing gold rush is now ground zero for its biggest collapse, with prices falling like a rock and no bottom in sight.